Hello, everyone, and welcome to Financial Foundation for Success, Class 3. We are just so excited you're here. Last time, we talked all about SMART goals and spending plans. If you haven't had a chance to watch that video yet, there's a link in the description box below.
Today, we're going to be talking about making your credit work for you. Please make sure that after watching this video, you click on the link in the description box below. There will be a few short questions to let us know that you watched the video. So welcome aboard, grab your life vest, and get ready to sail the high seas of credit.
So today we are talking all about credit. We got types of credit, the cost of using credit. Lots of times credit is not free, so we're going to be looking at that. We're going to be looking at credit scores and credit reports. That's usually everyone's favorite part, where they find out how the credit score is created and what a credit report looks like, how to pull one of those for free, and then also using credit wisely, because there are a bunch of ways to not use it wisely. So we are going to look at the ways to use credit best, the ways that it can best serve you.
That's right. So Tyler, can I borrow $100?
I don't know, Larissa. Last time you asked me this, I didn't get it back.
What? That's not true. Well, you know me, Tyler, so you can trust that I'll pay it back.
Well, I don't know, Larissa. I don't have any record of you paying back your debts. So, how am I supposed to know that you're actually going to pay me back?
That's right. So this scenario is something that a company goes through when an applicant is requesting a loan or line of credit. Because essentially, credit is trust given to another person for future payment. And that's exactly where your credit score and credit reports come into play. If a company has never met you or personally knows you, they're not sure and they can't determine if you are, trustworthy and will pay that monthly payment back when they loan you money. So that's how a company will determine your trustworthiness, is by using your credit scores and credit reports. So not only is it the actual act of having the ability to borrow money from financial institutions, whether that's through a loan or credit card, but it's important to remember that credit is also trust given to another person for future payment.
Who is a creditor? A creditor could be a bank, maybe it's a store like JCPenney's, or maybe it's a car dealership. It could even be a friend who lends you $20. A creditor is a person, company, or financial institution to whom debt is owed.
Okay, so now that we know the definition of credit and creditor, why is credit important? Credit is so important, especially in the world today. So many aspects of life can be impacted by our credit, so we need to be managing it wisely. Some reasons credit is important is being able to make large purchases that impact your quality of life, like a car or home. Even if you're renting, many landlords check credit for rentals as well. This plays into credit being a measure of your trustworthiness. If you have a good credit score, your landlord can trust that you will pay rent on time. It's also helpful for accessing loans for things like higher education for yourself or your children. While this is less common, sometimes it can even impact whether you'll be considered for a job, because that's tied in with the reliability and trustworthiness that good credit can indicate.
Did you know that there are actually two different categories of credit? There is traditional credit and non-traditional credit. There are essentially two different ways of proving trustworthiness. On the traditional side is everything we usually think of when thinking about credit. loans, mortgage, credit cards. On the non-traditional side, we have things like rent payments, utility payments, and cell phone contracts. How is this useful? Say you want a loan product of some sort. Let's say a personal loan from a bank, but you don't have any history with traditional credit. You've never had a loan, you've never had a mortgage or any sort of credit card before. The bank is going to say, we don't know if you're trustworthy with credit because you have no history to prove it. At that point, you may be able to use your history with non-traditional credit to help prove your trustworthiness to the bank and secure that personal loan you'd like to have.
So there's also two types of traditional credit, secured and unsecured credit. If you're still having a hard time obtaining that first line of credit to start building your credit score, a secured line of credit can be a good option as there's virtually no risk to the lender as you're obtaining the line of credit by putting money up front first. So secured credit requires you to put money up front, otherwise known as collateral, in order to receive the credit card or loan. Some people may wonder, what the point of that would be, because if they had the cash to put up front, they wouldn't need the credit. But we need to remember that we are using credit as a tool, not a way to purchase items when we are low on cash. By using secured credit to get that first credit card and using it wisely, it is now a tool to increase and build our credit scores. Now that we've talked about all the different types of credit out there, it's important to remember that while most types of credit have a lot of similarities, they can all have different terms and conditions and fees. So it's very important to make sure that we're reading the fine print and asking questions before we sign any applications or documents.
All right, who listening to this video has a fireplace in their home? Larissa, do you have one?
I wish.
Maybe a few of us. I know mine does. I appreciate a good fire. Fires can be pretty great, right? When kept inside the hearth of a fireplace, a roaring fire can bring us warmth, it can cook food, and bring about some great memories as well. Let me ask you, though, what happens when you let the fire come out of the fireplace hearth?
Oh, man.
What happens when we're not paying attention and the fire jumps onto the carpet? Here's what happens. We're in some big trouble and we risk burning the whole house down. Something intended for good came up and bit us when we weren't paying attention. The same can be said with credit. Credit can be a good thing. It allows us to buy a home when we don't have $100,000 in cash. But what happens when we don't pay attention? Things can get out of control very quickly. Let's take a look. Up at the top, we have the APR, or annual percentage rate fee. This is a percentage of money you're being charged if you carry a balance from one month to the next. We also have annual fees. This is the charge that you pay just for the privilege of using a credit card. There are late payment fees and over the limit fees. If you are late with your monthly payment or exceed your credit limit, you're going to get charged. There are ATM withdrawal fees, international use fees. If you think that there's a fee for it, there probably is. This is why it is so important to ask lots of questions and read about the thing that you're about to get into, whether that be a credit card or personal loan or any other sort of loan product.
That's right. That is great advice. Probably some of the best advice that we could offer is that if you are going to be signing up and applying for credit, read the fine print, ask questions, don't feel pressured or rushed. Because again, as Tyler mentioned, there's so many different fees that can be incurred and you just want to know what you're getting into ahead of time. So let's talk about one of those big fees. One of the biggest fee involved in using credit can be the interest. Regardless of the amount of money you use on your credit card, at the end of the month, your credit card company will send you a bill only requiring you to pay the minimum payment. This is only a small percentage of your total balance. Like Tyler mentioned earlier, any balance you do not pay in the billing period will carry over and be charged interest each month. And at an average of 18 to 24%, that can be a very significant amount. Currently, the average balance on a credit card in America is over $6,000, and many families have multiple credit cards. We want to use credit wisely. So if it's at all possible, we recommend paying your balance in full each month. That is the only way to avoid high interest charges. If that's not possible, or you're working towards paying down a high balance, even just paying more than the minimum payment will make a huge difference. Here we see an example of paying only the minimum payment on your credit card versus just paying an additional $10 a month. So, it's not a huge difference. We're just paying $10 more. And by looking here, you'll see that by paying $25 a month instead of the $15 minimum payment, you'll pay off a $500 balance 2 years sooner and save $111 in interest. So not only are you saving money in interest, but you're really saving time as well. So you can see the impact that $10 more a month would make. Imagine how much more you would save by paying $20 more or $50 more. Any amount that you pay over your minimum payment, you are saving money and saving time.
Okay, so now we've gone through some credit basics. Let's find out more about credit reports and credit scores. A credit score is a numerical representation of your trustworthiness when it comes to how you've used your credit. And I just want to make a point here. It's not trustworthiness with you as a person. It's not trustworthiness of you with your money. This is just trustworthiness when it comes to how you've used credit or money that you've borrowed. So that's important to keep in mind. This chart shows the ranges of scores in the different categories. So all the way down at 350, that is a pretty poor score. And there's a pretty wide margin there. It goes from 350 all the way to 619, lower 600s. That's considered a poor score. 620 to middle 600s, that's a fair score. Middle 600s to middle 700s, that is what's considered a good score. And then if you have 750 or so and above, that is an excellent credit score. And really one of the main reasons to have a better credit score is it will get you better loan terms for whatever loan product you're signing up for.
So how is that credit score determined? Let's look at the factors that impact your credit score. There are 5 factors. The first is payment history. The second is amounts owed. Third is length of credit history. And then lastly is new credit and credit types. Payment history is 35% of your credit score. So that's a major factor. That's the biggest factor that impacts your credit score. So we want to make sure that we're paying our bills on time every single month. Next is amounts owed. That's 30% of your score. So you want to make sure that you're keeping your credit balances low. We don't want to be using our full limits on our credit lines if at all possible. The third factor is length of credit history. That's 15% of your credit score. So as you can see, it doesn't hold as much weight as payment history and amounts owed, but we do want to be mindful of our length of our credit history. Keep those older cards, if at all possible, keep them open. That way you're benefiting from those years of having that credit history. The fourth one is new credit at 10%. What that indicates is if you've gone and tried to open many lines of credit in a short period of time, that looks like you might be desperate for credit, or you might be short on cash. So creditors will look at this new credit piece and want to make sure that you haven't opened many new lines of credit in a short period of time. Lastly is credit types at 10%. So again, this is also a smaller amount. And what this means is that creditors will look at all the different credit types that you have. Maybe it's a car loan, student loan, a few credit cards, a mortgage. But definitely Tyler and I recommend that if you don't have those different credit types, absolutely do not go out and open more credit cards and get loans just to satisfy this very small piece that impacts your credit score. We know that there are many people who have built up their credit score by just using 1 or 2 credit cards wisely and not having any other credit products. So when you're looking at this chart here, what you really want to be mindful of and pay the most attention to is the payment history and amounts owed, because that makes up the bulk of your credit score. And those are things that you can really work towards, paying your bills on time and keeping your balances low.
A credit report is a detailed report of a person's credit history. Credit bureaus, which we'll talk about on the next slide, collect information from creditors, the folks lending you the money, and create credit reports based on that information. Lenders, or a person's future creditor, will use these reports along with other details to determine an applicant's credit worthiness. In other words, how trustworthy are they going to be with the money that they are considering lending to them?
As Tyler mentioned, credit bureaus collect information from your creditors. There are 3 different credit bureaus: Experian, Equifax, and TransUnion. It's important to know the 3 different bureaus because creditors may not report to all 3. So you may have different information being reported to the different credit bureaus. This can also be why you may see that you have multiple different credit scores. For example, if your credit cards are being reported to Experian and Equifax, but you may have a collection that's only being reported to Equifax, you may have a lower score, a lower credit score that's being reported when you're looking at just Equifax. So it's very important to pull all 3 of your credit reports from all 3 credit bureaus. That way you can check what information is being reported and make sure it's correct.
So let's say you have a copy of your credit report. What are you going to find on there exactly? One of the main features is your credit history. Every loan product you've ever had will appear on your credit report. Old credit lines will drop off after a certain number of years, but for the most part, you can expect to see all of your active and recently active credit lines. You'll see your history with each trade line. For every month you've had the loan, have you been on time or have you been late? You'll also see any collection accounts. A collection is when an original creditor, say JCPenney, sells your debt to a collection agency because you haven't paid your bill. The collection agency will then attempt to collect the money that you owe. Any collection accounts in your name will appear on your credit report. If a creditor has ever requested information about your credit report, you will see it in the inquiry section. A lot of people are fearful that if they check their credit too often, their own credit score will decrease. This is actually a pretty common myth. You personally can check your credit score as often as you like, and it will never once hurt your credit score. What does sometimes ding your credit score or bring it down just temporarily is when other people check your credit. So just something to be aware of. It is a relatively small portion of your credit score, so it's not anything to get worked up about. You will also find a lot of your own personal information on your credit report. Things like your name, your social security number, employers, current and past addresses. It is all on your credit report. Finally, any public records you have will appear on your credit report. This could include bankruptcies, judgments passed down from a judge, or any other court decision as it relates to your credit and paying back your debt.
So where can you get your free annual credit reports? Now that we've talked about the different credit bureaus and the information that is included in your credit report, you'll want to make sure that you start checking it at least annually. You want to make sure that there's no mistakes being made and that information is being reported about you correctly. There is only one website that is authorized by federal law to provide you with a free credit report each year. That website is www.annualcreditreport.com. That is the only site that you want to use. If you type into Google, "get my free credit report," hundreds of websites will come up, and you don't know if they're scams. You don't know if they're going to charge you or require a credit card. So if you are planning on pulling your free annual credit reports, go to www.annualcreditreport.com. As you see here on the screen, this is a copy of the header from the website. That way you can make sure you're in the right place.
How about annual credit report for free?
No.
How about credit reports for less for free?
No.
Oh, so it's just the website's called getyourcreditreportnow.com, right?
Tyler.
I'm just joking. It's annualcreditreport.com. Don't even think about going to another site. Annualcreditreport.com. We should make a jingle about that. People would remember it, Larissa.
We should.
Not today, though. There are some other safe ways to get your credit reports. It does not have to be done online. I understand that there are probably people watching this video without regular internet access. So there are some ways that you can do it. First off, you can call toll free, the number right there on the screen. It is 877-322-8228. Call that number and they can help you over the phone get your annual credit report for free. You can also complete the annual credit report request form and mail it to the address listed there. Lastly, you can print a copy of the annual credit report request form from annualcreditreport.com or even ftc.gov/credit. There are multiple ways to get it, even if you're having some trouble initially getting it online.
If you have never pulled your credit reports before, we recommend pulling all 3 from each credit bureau at once the first year so that you can review them and make sure everything is being reported correctly. Once you have done that, we recommend spacing out the reports throughout the year so that you can monitor your credit more frequently. So instead of pulling all 3 at once, the following year you can request 1 report from each credit bureau every 4 months, and that way you'll be able to monitor any changes that occur on a quarterly basis instead of yearly. That's important because say you pull your credit report in January and then something is being reported incorrectly in February, or perhaps there's been, some type of identity theft and there's a new line of credit that you haven't opened being, reported to the credit bureaus. If you didn't pull your credit again until the following January, almost an entire year will have gone by without you maybe knowing about what's happening. So that's why we recommend spacing them out, pulling one every couple months. That way you can review it much more frequently and keep an eye on your credit for free. All right, so before we move on, let's check in to see if you remember that website we mentioned. Like we said, if you just Google free credit report, a whole list of websites will come up, any of which could be scams. And because this is so important, we want to make sure that that website is front and center on your mind.
Locked in.
That's right. So what is the recommended website where you can obtain your free annual credit report? We'll give you a couple seconds to think about it. All right. Does everyone have their answers? Tyler, do you have your answer?
I've got my answer.
All right.
Is it annualcreditreport.com? Ding, 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 ding.
That's right. If you said annualcreditreport.com, you are correct. This is the one website that you'll want to navigate to.
Okay, so we have been talking a lot about credit, kind of like what is a credit report, what's a credit score, a lot of the what's and abouts of credit, not actually much action though. So let's take a look at that. What if you're completely starting from square one? You've never had a loan, no credit, no mortgage, no credit card, nothing like that. How do you get started? Sometimes having no credit can be just as concerning to a creditor as poor credit because they have no information to see how you have used your credit in the past. If this is you and you're looking to build your reputation as someone who can be trusted with credit, here are some ideas. First, you could apply for a small loan or credit card and use it wisely. Wisely being the key word there. So we recommend just putting a regular expense on your credit card. You don't have to go and spend thousands and thousands of dollars. Even just putting a Netflix subscription on a credit card every month and paying it off every single month, that will build your credit score. This is a marathon. It is not a sprint. You cannot raise your credit score hundreds and hundreds of points overnight. So keep that in mind. Second, you could apply for a secured credit card. If the first thing didn't work for you, they wouldn't give you a small loan or a credit card. You could always try applying for a secured credit card. Again, secured means that they have some form of collateral in case you don't pay your credit card bill. So it's no risk to them, but reward for you, or at least potential for reward. Third, make sure to pay your bills on time. This really speaks to your non-traditional credit. So if you don't have any traditional credit and your non-traditional credit isn't looking good either, that would be a good place to start. So make sure that you're paying your rent on time. Make sure you're paying your cell phone bill on time. All of your bills, your utilities, make sure all of those things are up to date and on time, so that if you do need to prove your trustworthiness via your non-traditional credit, you have basically proof that you are trustworthy. Lastly, make regular deposits into a savings account. This really speaks to the non-traditional credit piece again. So if you're making regular deposits, whether that's a paycheck or social security check, into an account, that shows that you at least have some form of stability in your life, that you're getting regular income, and banks and other creditors really like to see that.
What if you've already established credit? You're not new to credit, but perhaps you made some mistakes in the past or didn't realize the terms and conditions when you started using credit, and now you need to repair it. The great thing is that it's never too late. Even if you have some negative items showing, there are things you can do to rebuild your credit. It's important to remember that even if your credit score is low now, credit scores go up and down. The one thing guaranteed is that your credit scores will change over time. So don't feel hopeless. If you start working on repairing credit, you will see your credit score go up over time if you stay consistent. The first thing that you'd want to do is review your credit reports. So if you haven't done that yet, pull your credit reports and make sure that there are no errors. If your credit score is being lowered by something that may not even be factual on your credit report, you'll want to get that removed right away. Next, you would want to create a spending plan in order to pay back the legitimate debts and collections that you may have. Make all of your payments on time. As we saw in the previous slide, payment history makes up 35% of your credit score. So if you consistently make your payments on time, over time, that will increase your score. Lastly, you'll want to make sure that you're reducing your credit usage to lower than half of your credit limit. So for example, if you have a $1,000 limit, you won't want to carry more than a $500 balance. By utilizing all of these tips consistently, you can see your credit score increasing over time.
This is something we often overlook. But once you establish or repair credit, you don't just want to forget about it. Now is the time to change gears and focus on maintaining that credit. Here are some tips that will help you maintain your credit. Review credit reports yearly at a minimum. We've talked about this before in this class. If you've pulled your credit reports before, consider pulling one of the 3 credit bureaus' reports every 4 months. Doing it this way will allow you to have regular checks on your credit to make sure everything is as expected. Second, do not apply or use credit without a plan for repayment. Doing so will only lead to trouble. Make sure you enter any new debt payment you're considering into your spending plan before signing a contract to make sure it fits well within your budget. And remember, you do not need to take the maximum loan or credit line offered. Often when you have excellent credit scores, creditors will offer you large loans and high limits. It is up to you to determine what payment fits into your budget, not the creditors. Next, contact your creditors ahead of time when experiencing a crisis. They are humans as well, and they understand that people come on hard times. They'll be much more likely and willing to work with you if you communicate with them before you start having late payments. If you do miss a payment, make that a priority. You want to resolve the issue before it comes a collection.
Alrighty. You've learned about credit. You've learned about credit scores and credit reports, building credit, maintaining credit, all things credit. Tyler, let them know what's about to happen.
You see, folks, here in this Financial Foundation for Success program, we have this little thing that we like to call Credit Jeopardy! If you've seen the show, it's pretty similar. I think you're going to want to stick around. Larissa, would you say so?
You're going to want to stick around.
Last thing before we get started, we encourage you to play along. Keep your score, answer the questions, and see if you can do as well as some of our lucky contestants. Okay, let's do this thing.
Good evening, folks, and welcome to another exciting episode of Credit Jeopardy. On today's show, we have Bob Business, Fred Flannel, and Carla Crochet. Give them a hand. Let's meet our contestants. Our first contestant is Bob Business from Des Moines, Iowa. Bob?
Well, thank you, Larissa. My name is Bob Business, and for fun, I like to collect calculators. I have 302 calculators right now and hope to be making an additional purchase right after the show, which would put me at 303. Also, in my spare time, I like to talk about insurance, sometimes on the beach.
Thank you. Thank you, Bob. That was very interesting, and we appreciate you being here. All right, and our next contestant is Fred Flannel. He's an up-and-coming taxidermist coming to us from Sheboygan, Wisconsin. Fred, how you doing today?
Yeah, hey there, Larissa. Like you said, I'm a up-and-coming taxidermist in the great state of Wisconsin, and I decided to come down here today to maybe win some money.
And if you win, what do you plan on doing with this prize money?
I thought maybe I would buy a boat, or maybe one of those ATV critters, and maybe some more hides.
Can you taxidermy an ATV?
Well, I figure if you have the right tools, you can do anything you want.
You know, that is the comment of a winner. I think Fred might be our contestant to watch.
Thank you. Thank you very much, Larissa. Or Larissa or Larissa?
It's Larissa.
Larissa. Okay.
Larissa.
All right.
Very good. Here we have Carla Crochet coming to us all the way from sunny San Diego.
Hi, my name's Carla Crochet. I got this thing in the mail, and it said that I could be a contestant on The Price is Right. And so now I'm here, and I'm just so excited to maybe win some money.
Carla, are you in the right place? This is Credit Jeopardy.
Oh,
It's fine. You're here. You're here.
Oh, okay.
Thank you. Thank you so much, Carla. All right, let's take a look at tonight's categories. We have credit basics, credit scores, and credit types and fees. Bob, would you like to start us off with a selection?
I'll do credit basics 100.
All right, credit basics for 100. What is trust given to another person for future payment?
I say the answer is credit.
And the answer is credit. Very good. So the board stays with you.
For my next one, I will do credit scores 100.
What is a number that helps a lender predict how likely an individual is to repay a loan or make credit payments on time?
That would be the bank.
Okay, I'm sorry, Bob, but that is incorrect. The question was what is a number? Is the bank a number, Bob? What is a number that helps a lender predict how likely an individual is to repay a loan or make credit payments on time? Bob said the bank. That is very incorrect. The answer is credit score. So unfortunately, because Bob could not compute that correct answer, the board moves on to Fred Flannel. Fred, let us know what you select.
Well, I'll do types and fees for 100.
All right. What is the fee that is charged every year on some credit cards?
Every year? Oh, annual fee?
That's right. Very good.
All right. How much money did I win?
That's $100. The board stays with you, Fred.
I like that category. Let's do another types and fees for 200.
What does APR stand for?
This is another one of those credit questions. Types and fees of what? Types of fish?
Now, this is Credit Jeopardy.
Oh, credit.
Yeah.
Can you?
Not Catfish Jeopardy, Credit Jeopardy.
Oh, APR. That might be annual percentage rate.
We're going to need the full answer.
Annual percentage rate.
Very good. And the answer is annual percentage rate. Fred Flannel is taking the lead.
Hot dog. Next question.
Yeah, so pick. You can pick. You can pick, Fred.
Okay. Credit basics for 200.
What is a person or company to who debt is owed?
Oh, that would be Bass Pro Shops. I do a lot of shopping there.
You owe a lot of debt to Bass Pro, huh?
Yeah.
Yes. So, in other words, what could Bass Pro Shops, what could another word be to describe the relationship?
Probably like a fishing buddy. That's my final answer.
Okay, unfortunately, that is not correct. A person or company to who a debt is owed is a creditor.
Oh, man.
Not a critter, Fred, a creditor.
Oh, man. Okay.
All right, so Fred's small run has ended, and we are now going to Carla Crochet.
Let's do credit basics for 300.
If you have a high interest rate on a loan, will that cost you more or less money than a lower interest rate?
Well, I know that when you have a lower interest rate, that is better. So I'm going to say more.
That's right, Carla. The answer is more. Very good. The board stays with you. What is your next selection?
Speaking of more, I can't wait to make some more sweatshirts for my dog when I get home.
How many dogs do you have?
Just one, but he wears a different outfit every day.
That is very whimsical.
I think for my next one, I'm going to do credit scores for 200.
Okay. What will happen to your credit scores over time?
Well, if it's anything like the time that my neighbor mows his lawn, my goodness, sometimes he is up at the latest hours, mowing and mowing, keeping me awake. It changes. Your credit score, it changes.
That's right. So what will happen to your credit scores over time? They will change.
Yes.
Very good, Carla.
Is it me again?
It's you again. You're just on a roll.
Okay. Let's go types and fees for 300.
What type of credit requires you to put money up front first?
Oh, it's those ladies. It's those ladies at the quilt barn. They always want to see your money first before they give you the equipment. Quilt barn, final answer.
I'm sorry, Carla. That is not correct.
Oh.
I know. You are doing great, and well, I'm sure you'll make a comeback here, but this question, what type of credit requires you to put money up front first? The answer is secured credit. All right, so the board now goes back to Bob. Bob, what category and amount would you like to choose?
Larissa, I will do credit scores 300.
The higher the credit scores I have, the blank interest rate I may receive from a creditor. So the higher the credit score you have, what kind of interest rate might you receive from a creditor?
Is that a question for me?
Yes, Bob, that question is directed to you. That is the category and amount you chose.
I'm going to go lower.
Very good. The answer is lower. So the higher the credit scores I have, the lower the interest rate that I may receive from a creditor. Very good, Bob, and the board stays with you.
Knew it the whole time. Let's do credit basics 400.
Now these are getting a little tougher now that we're into the higher amounts. You're not worried.
Not worried.
What are two types of credit?
Is this one me again?
Yes, Bob, you're still on here, and the question is, what are two types of credit?
This is the IOU and the pay you back later.
I'm sorry, Bob, that is incorrect. The correct answer is, what are two types of credit? Two types of credit can be secured versus unsecured, and traditional versus non-traditional. All right, now the board is moving to Fred. Mr. Flannel, what would you like to select?
Well, I'll tell you what I'd like to select would be a new flannel from the Big and Tall store, but what was your question?
The question, Fred, is you're now on, and it's your selection to keep this game moving forward.
Maybe one of those big ones. Credit basics 500.
What are two reasons that your credit should be important to you?
Well, I got two reasons right off the top of my head. One, you can buy a bigger boat, and two, you can buy a bigger truck.
Is that your final answer, Fred?
Well, I suppose there's also things like education, or maybe that instead, like education and being able to buy a car.
Yeah, I would say that that is an acceptable answer. Really, there are multiple reasons that your credit should be important to you. That's definitely one of them. Having access to loans, so buying that bigger boat or that bigger car, which, you know, might not be the best choice for everybody, but yes, access to loans, that's definitely a reason, as well as accessing higher education, accessing employment or rental opportunities. These can all be reasons that your credit should be important to you. So way to go, Fred.
I went to a seminar the other day that was talking about how to get your hook better on the line so it doesn't fall off. And I paid $50 for that course.
Yeah, I mean, I feel like that has some similarities to credit. You want to keep your hook on the line. You want to make sure that you are using your credit wisely and making it work for you, just like that hook on the line.
That's right.
Very good, Fred. The board is still yours. We have you've cleared out the credit basics category, so congratulations there. And now we are left with credit scores and types and fees of credit. So what would your next selection be?
Well, I feel like 400 is always a good number to go by, just in general. I'll do credit scores, 400.
Okay. What is the number one factor that impacts your credit score?
Number one? Well, when I bought my shop for the taxidermy, the salesman told me that I better pay him back or I'm not going to have any more credit. If I paid him back, then maybe I would have good credit.
So I'll clarify the question. What is the number one factor that impacts your credit score?
So if you're saying that my cat dug a well and went for a swim and didn't pay me back for the materials, that he would have bad credit.
If I'm following you here, Fred, which I may not be, but yes, I would think that would give your little cat bad credit.
So then if I'm listening to you right, then you're saying if my cat has bad credit because he didn't pay me back for digging his swimming pond well, then that means the answer is payment history.
That's right, Fred. Congratulations. The number one factor that impacts your credit score is payment history.
Know it all.
You better give that cat a little talking to.
I know it. I get on him all the time. I joke with him, tell him I'm going to turn him into a taxidermy, but I won't actually.
All right, let's move on here. Let's move on to another selection, Fred.
I think for my next selection, I'm going to do taxidermy and fees for 400.
All right, let's just do it. What are two forms of non-traditional credit?
Is that like when you catch a bass when you really got the lures for a muskie? Like non-traditional?
Yes.
Okay, so if I'm following you right then, which I think I am, then two types of untraditional credit might be like a sunfish and a like an eel or something weird like that.
Well, unfortunately, Fred, that is not correct.
Oh.
Yeah, I heard what you were saying, but unfortunately, two forms of non-traditional credit could be things like rent, utility bills, cell phone. So if you had said two of any of those, that would have been the correct answer. So I'm sorry, Fred. We're going to move on to Carla.
Cell phone is untraditional. I will say that. Never owned one in my whole life.
Just a CB radio?
That's right.
Just a walkie-talkie?
That's right. It's like you know my life.
Thank you, Fred.
Carla, over to you.
Thanks, Fred. I'll handle that. Carla, it's over to you. Glad to have you back on. We got some high scores left, so let's see if you could, pick the lead back up.
Larissa, I'll take types and fees for 500.
Okay, Carla, your question is, what are two benefits of paying more than the minimum payment on a credit card or loan?
More than the minimum payment, I know this. Those people at the barn told me this when I bought my bulk order of yarn. It was almost as big as a cow, if you can believe that.
Oh my goodness.
Big as a cow, they said. And I'll tell you how many scarves I knit from that.
How many?
Well, a lot.
Very good.
And they told me if I paid it off faster, I could get more faster. So I think the answer to your question that you're asking me here is, one, pay it off faster, and two, you could probably save money on interest. You won't pay as much interest if you pay it off faster, and that means you can go and get more yarn even faster.
That is right, Carla. Very good.
Yes, it was. Yes.
Yes. So the two benefits of paying more than the minimum payment on a credit card or loan, like Carla said, you pay it off faster and you save on interest. Okay. So looks like you're moving on to our final question. Credit scores for 500. You're going to clear the board here, Carla.
Last
question. Are you ready?
I knew I could do it. I knew I could do it.
What are 3 factors that impact your credit score?
Oh, like the gentleman earlier in the flannel, he said payment history is one of them. And another one might be amounts owed. Because I feel like if you owe too much, maybe you'll be less trustworthy to the people at the barn.
Mm-hmm.
Lastly, I think that if you have been borrowing money a longer amount of time, that the people at the yarn barn might trust you more. So probably length of credit history as well. So in total, I think that makes it payment history, total amounts owed, and length of your credit history. That's my final answer, Miss Larissa.
Thank you so much, Carla. That is correct. So 3 factors that impact your credit score: payment history, amounts owed, length of history. You know, if you had also said new credit or types of credit, those are also factors, but that is absolutely correct. All right, now that all the questions have been answered, we are tallying up the points, and Carla Crochet is our winner. Congratulations, Carla. Carla, what are you going to do with your winnings?
Well, Larissa, I'll tell you what I'm going to do. After watching your class, Financial Foundations for Success, I think I'm going to invest in my emergency savings fund. I do not have one yet, and I would love to get that 3 to 6 months of savings before I go spend some more money on my yarn. So, to answer your question, I think I'm going to put it in emergency savings and then, of course, go over to the yarn barn.
That sounds like a great plan, Carla. Thank you so much for being here. Everyone, give Carla another round of applause. Now that we've talked all about credit, let's think ahead. Is there a SMART goal about credit that you can add to your financial goals and action plan? Think about the current state of your credit. Is there a goal that can improve your financial future and financial stability? If so, add that to your financial goals and action plan. Thank you so much for your time in watching this class. Remember, if you do have any questions, please feel free to leave a comment or contact your personal financial coach.
Thank you for watching today's video. There are 2 things you need to do still. First, in the description box below, there is a link where you can take the survey and confirm that you watched today's video.
Second, whenever you're ready to watch class 4, whether that's now or on another day, you can find that link in the description box below as well. We'll see you next time on Financial Foundation for Success.